All right, so I have a quick update for you today, and I'm going to go over a couple things. It's Friday, it's the last day of the week, and I have been using my new scalping EA, which is showing very good results. And actually was able to come out with $26 profit and just in the last 48 hours, so about 1%. Not bad, right? And I showed that there was a test that I did with this strategy, showing that it took a lot of trades, and over a period of 2 years, it took almost 20,000 trades, and it showed really good accuracy. But you can see here that control points test, and it's in red. A very crude method. Results not must not be considered. Now, I do agree with that, and because I never really take control points tests too seriously, but they most of the time will show you how where the losses are if the account blew up and so on and so forth. But the actual profit number, which is $113,117, is not accurate. That's going to change when you do an every tick test, which is a lot more accurate, and it shows you about 90% modeling quality. As you can see here, it doesn't even say. Okay, so when I finished my testing, and I mentioned yesterday in my last video that the testing wasn't finished with this expert advisor, and some things could change. And they did. They changed in a pretty big way. The profit potential was not even half. And I was looking at about 10 to 20% profit potential with the strategy each month, which is still great. But I was also risking 100% of this $2,000, and that wasn't good enough to justify 100% risk on the account. I need to be making 50 to 100% a month or so to justify 100% risk on the account. If you want to do high risk trading, you gotta be making a good amount of profit each month or each week, and that just wasn't cutting it. 100% risk for 10 to 20% per month, not good odds and good numbers. So I need to modify the strategy a bit more before I can use it in a comfortable way, and for it to meet at least my short-term goals, because at this point it wasn't doing that. So very cool strategy. I really like it a lot, and it showed some good profit potential as well. And I even made some profit, but it did show some pretty heavy drawdown today. So let me get into this trades today. So easy trades here, buy and sell, and they actually came out in profit. This one also did close out here. Another short position sell trade that took profit of 5 pips. And then during the European session and the US session, the Euro US dollar just kind of fell, and it kind of fell about 100 pips from my top order. Each position has a slightly higher risk, and so I only needed about a 30 pips or 20 to 30 pip pullback. Finally got it here, and roughly about an hour or so ago. So looked good, but it also did give me about almost 16% drawdown, which is $327. So not great on the risk percentage. I was able to come out with about 1% profit. Still, not great. So I'll maybe come back to this strategy at some point. I'll continue to work with it, see if I can find some solutions to the uh, discrepancies in my testing that I came up with yesterday. I do have a backup though, and the backup is a slightly newer expert advisor that I've been working on for the past month. And it basically is the same as my previous strategies, which you guys have probably seen me talk about, which is using the RMI. Let's see the RMI indicator, which is a custom indicator that you can find online. It shows you overbought, oversold. It's a relative momentum index. So it shows you when prices under 30, that means prices should be under overbought. Oh, sorry, oversold in here. And it also shows you when it's above that it's overbought, and it's probably wise to start looking for short positions or sell trades. And that's what the strategy has been looking for, and I've been working with the RMI for quite a long time. And as you guys know, I did recently take uh, a loss because I manually intervened with the strategy when it was receiving 30% drawdown. So the RMI strategy definitely have weaknesses. And it's because it took quite a few trades, even on the 30-minute time frame. And because it was taking a lot of trades, it means that the exposure was pretty high. And when market goes against us, It means that we have a lot of potential for to have higher drawdown. But when the price does go below the 30, we look for an inside candle setup, like you see here, two candles. One is bearish, one is bullish, and a good time to enter the market. And it worked out. It usually works out fairly well. But as you guys know, this strategy can have higher drawdown. So what's different now? I replaced the RMI strategy with an iBands. Now, what is iBands? It's also a custom indicator. You can find this one on mql5.com if you search it out. It's based on Bollinger Bands. And so it shows you a very similar situation of overbought, oversold, like the RMI did. But it's actually more extreme. It needs more price to really show you where the overbought and oversold areas are in the market. And I'm going to show you some of the trades that have been taken. So this strategy does quite a few different things differently than what my previous strategy does. But first I'm going to tell you about the similarities. One, the only similarity here is that it takes trades based on the inside candle technique. So two candles, and if you don't know what that is, watch my previous videos and you'll get an idea. Okay? And pretty much everything else is different. So one, take profit is much lower at 15 pips instead of 50. So that's a huge difference. Two, the grid has been changed from 20 pips to 100. So I'm doing a 100 pip grid now, which is much larger, and it's not quite as risky as well. And three, it takes a lot less trades. And we're talking about maybe going even 10 days without a trade. But when that trade actually goes in, it's very accurate, and I'm able to take high risk on it, and it works out very well, which I'll show you here in a second. Number four, the strategy has a much smaller stop loss. Instead of 500 pips on each trade, it has a 200 pips stop loss. So 200 pips is what I'm looking at now. And you might be thinking, well, if you have a 15 pip take profit and a 200 pip stop loss, that's really bad risk management. Still, guys, you got to understand that that's how I do my trading. I like more room on my trades. That's why my take profits are much smaller, and I try to minimize the potential losses. And that's why my loss is much smaller than it was before, but it's still quite large. So 200 pips works really well with the strategy. You can actually see where those losses happened in the strategy. So 200 pips here, 200 pips there, 200 pips here, 200 loss, 200 loss, and I think there was a couple more in the previous history as well. So this is a 10-year test that you see here. Again, it's a control point, so you can't look at this $17,668,632 as accurate. So please don't look at it like that. So you have the 200 pip, you have the entry here, you have the oversold condition here, the move down, and the re-entry that happened here. So it took a second entry thinking that it could bounce up there. It didn't. Move down. First trade, so trade number one, closes out for a loss here. And I'll say loss, if I can write that. And the second trade lingers on. So the second trade also has a 200 pip loss on it, but it didn't go down 200 pips. Actually, it went down 100 pips right here, entered a second position, price shot up. We closed out for 15 pips, take profit. Slightly higher risk on trade 2 compared to trade 1. So you could say that this is a 3-trade system here. Trade 1 was closed out. Trade 2 entered. Now trade 2 lingered while trade 1 closed out for a loss here. Right? Trade 2 now turns into trade 1. So you can cross that out. It's now trade 1. Trade 1 now gets a trade 2. And trade 2 and trade 1 close out for profit. Right? If that doesn't make sense, I'll go over more of this in future videos to let you know how the strategy actually really works, because that's what I do. If I'm using something, I'm going to tell you guys exactly how it works. No secrets here. And that's how I run my channel. So let's find some more trades and show you how accurate some of these are. Okay, so here's one here. Here's a sell trade that was in for 30 minutes. Enter and exit. So iBands moves into overbought. Entry here on an inside candle, and that's it. Okay, and we don't have any trades for days. So this trade was taken on the 19th of January, and the next trade wasn't taken until the 25th. But this one was very accurate as well. Oversold, inside candle, shoot up, take profit was done here. So that trade only took about 2 hours to close out. All right, so another oversold condition here on the iBands, inside candle entry, further extended down, but closed out, had a nice recovery. That trade was closed out in about 2 hours as well, 2 or 3 hours. I'm going to do one more. Overbought here, inside candle setup. This trade was closed out in about an hour. Okay, so you can see that a lot of the entries are much more accurate, fewer trades, which means less exposure, but we do have higher risk. So I'm able to push the strategy pretty high, pretty heavily when it comes to the risk settings. And it's because I have a controlled stop loss. I have a larger grid, so I'm not entering as many trades. And you can see here on a $2,000 account, I'm entering trades of 0.56 and even 0.96 lots on this trade. So it's really high risk, but we're also using a 500 account leverage is 500 to 1. So we have a lot of margin to work with. But the trades are very accurate, and I will take some pretty big losses potentially on the strategy. And these losses that have 200 pips are quite high. But I make them back very very soon after because the most of the trades close out and profit very quickly. So past results don't guarantee future results, and I keep saying that all the time because some people keep thinking, well, or keep saying that you have too much confidence in your trading, and that's not that. Past results don't necessarily guarantee future results, but past results can potentially mean future results. Doesn't mean that it's going to be 100%, but what's happened in the past, and if you have a working strategy that works well in the past, potentially it can work well in the future. So, that being said, keep that in mind when I'm trading the strategy. All right, so this is a $2,000 account moving into 19 million. And like I said before, those numbers are not accurate because I haven't done a complete every tick test yet. But I have done some every tick tests so far to compare the results of control points and every tick, and they are pretty similar. It does show me the actual losses that happened, and the losses are the same from a control points test to an every tick, which is what I'm looking at right now. I want to see if the strategy has potential, where those actual big losses were, and where the trades were entered, right? So that's where I am right now, and we have a lot of potential. And will things change before my next, for my next video on next week? Potentially. I might find better settings. I might find something that shows that the strategy will blow my account and it's too risky. This is a work in progress, and you know, I tried to minimize the videos in the last month to because things were changing so often, and I was doing a lot of research and trying to make decisions, and things are still changing even now. So bear with me on that. And I hope to continue to share my strategy and what's happening with it. But there will likely be fewer updates in the future because I'm taking less trades. Less trades means less excitement, and a lot of times you guys don't want to you don't want to watch a stream or a video series that doesn't show any trades, right? So I'll be talking about the trades when they happen, and if I have something to talk about when it comes to risk management or changes with my settings or strategies, then I'll do a video on that as well. But probably fewer video updates. I would say, guess maybe 2 or so a week on average. But hopefully you guys will still continue to stay subscribed and watch my new iBands indicator and strategy develop. This one right now is a lot more solid, I think, than the scalping technique was. The scalping technique still shows a lot of potential, but it still needs more work. iBands is something that I've been working on for a lot longer than the scalping strategy, and so this is a lot more solidified at this point, and I do feel like this is a strategy that I will be using for the next many months to come. All right, with that all being on the table, thanks guys for watching and welcoming me back, and for also for your comments that you said in the last video. I like having interactive, and I will potentially talk about the comments that were said in later updates. And let's see if I have some time to talk about that now. We're already a little bit far through the or a little bit long on the video of what I wanted to do today. But in later videos, I'm going to be talking about the comments. So please leave comments on this video and on the past one as well, and I'll go over them potentially, and we'll talk about your opinions and your advice as well with that. And if you have any questions about your strategies and things like that, I can try to answer that as well. Okay, so that's it for this video. I'll see you guys potentially next week. Let's see if anything happens. Maybe I won't have any trades, may not give you an update. But be patient, and I'll see you next time. Bye.